Hi, folks. This is Sean Hyman from Chart of the Day, and I want to talk to you about let the market tell you what you should do. And what I mean by that is, of course, you can have the news media tell you what to do. And I want to pull up a chart here from, or rather, a news feed from Bloomberg, and it says Euro gains for a second day versus the dollar on a $1 trillion Europe aid package, and it was just shy of $1 trillion worth that the EU put together, and the IMF joined in, and it's to help save Greece. It's to help defend the euro and intervene in the euro, and all these sorts of things that should be good, right? Should add some confidence that all these European Union members are getting behind the euro, and they're getting their act together, they're pulling together, they're pulling in one direction, all this kind of stuff. Should be great, right? Well, let's and if you read the headlines too, it should be great, right? Because that's the way the headlines are painted, and in no disrespect to the Bloomberg guys. But what I would encourage you to do as a trader is to allow the market to tell you what it's doing. And so, looking at the euro dollar on the daily chart, first you can see that the trend is down, as noted by a number of major moving averages. These are the 50-day SMA, the 100-day SMA, which stands for simple moving average, and the 200-day simple moving average. And the price is below them all, and all the averages are pointed down, so it's a distinct downtrend. But this news could have possibly had the potential to put a floor in the euro, and at least start the makings of a trend change, even though it wouldn't be a trend changer in a day, just because of that. And so initially, when the markets opened up, you have Sunday and Monday's candle, and it ran up definitely, 300-400 pips or so, and then started to fade, and gave back, half of its gains on Monday. And I want to zoom in on this and go to a 4-hour chart. We'll go to 4-hour, 40-day chart. You'll see even that the trend is down in the medium term as well. The price action is down. You got lower highs, lower lows. All the moving averages are pointed downward, and the price is below all of them. So there's no way you can say that the trend is not down in the medium term or in the daily chart in the long term. And that trend just continued. I mean, this thing popped up and ran up here to the 50 SMA, turned around and headed lower, and has given back a good bit of that. And now there's a good chance that, of course, the downtrend could continue and go even further. So the thought being, if the market should respond in a favorable way to this news, where everybody's trying to get behind the euro and help it and save it and help Greece, and the IMF and the EU and all these members together in the Eurozone are pulling together, and all these countries are doing what they need to, even despite some licks they're taking in Germany over overdoing it and that sort of thing. Should be a good thing for the euro, because you're going to see them support the euro, correct? So it should mean that they'll see the decline halt and an upward move begin. But the market did not do that. Market took it higher, but then reversed lower, even with the Dow Jones Industrial Average having a 400-point day on the day today. So you had sentiment great. You had people going out and taking risks. You had the Dow with a 400-point gain on it. Most markets up 3 and 4% in the day is very positive. And yet the euro, all it could do is fade its own rally and give back 50% of the whole move. And there's a good chance that that's not done yet. So basically the market's telling you that you should still stick with the trend. The market's telling you that the downtrend is still intact. The market's also telling you that ultimately the investors out there around the world that invest in currencies must not really be a big believer that this is going to fix the euro, and they think it's more hot air than substance to it, and that's why the sell-off. So instead of just seeing news and seeing, oh, this should be good, and then placing a buy order, see how the market reacts to it. Look at the daily chart and the candle and how it's forming up. Look at the 4-hour chart and seeing how the trend is, seeing if it's overcoming a trend in any trend change coming along. In other words, if this would have been at least started to be somewhat bullish, if we could have connected these highs here, somewhere along in here, There we go. And it would have had to have broken this line, this red line here. And so if it could have climbed above the 50 SMA, could have climbed above this downward sloping line here and held, 131.50, somewhere around in there. And then even if it had traded water and started a gradual ascent, it would have been a great bullish thing. But what did it do? The first roadblock it hits, it spikes above it, closes below it, and then trades down, a good couple hundred pips or more, actually more than that. And so you got to let the market dictate and tell you what it's going to do. Too many times, the new trader says, "Well, I need to get better at predicting what the market's going to do." We can't. I mean, we as pros cannot predict, no more predict what the market's going to do than I can predict for sure with absolute certainty what the weather's going to be tomorrow, whether I could potentially have a car accident or not. Just no more than I can predict any of those things. Just like I can't predict what's going to happen in stocks tomorrow or any of that, I can't predict what's going to happen in currencies either. So that's why traders need to be what's called trend followers. Notice that pros are followers of a trend. So the trend is downward as shown by the lower highs and lower lows. The major moving averages are pointing downward on the daily and the 4-hour chart. And so you would want to look for sell short opportunities. Another one, of course, that I look at running the Currency Cross Trader service, which I'd encourage you to check into. We've done really well in that service. Is the euro yen, because it'll have even more pronounced gains and losses in the pair that you can take advantage of, even than euro dollar does. And we got the same scenario here. Downtrend, lower highs, lower lows, huge sell-off, bit of recovery, and selling off there. And then that's on the 4-hour on euro yen. If you go back to the daily chart, you've got a similar situation as well, where you've got the major moving averages pointing down, the price trading below all of it. It spiked down, spiked back up, and now has given back a good bit of those gains. Well, the euro positive sentiment is not here yet. Things aren't fixed in the eurozone yet, and I liken it to, let's say you had a really crappy stock and they had really beat up crappy earnings and the company was just horrible. Well, let's just say I was the Fed and Treasury, and I wanted us to get together and prop up that stock and shoot that stock price higher. And I could probably do it in the short term. However, what's the problem? The underlying factor is, should that stock be worth that level in the first place? And that's going to be dictated by earnings, the earnings of the company and the health and balance sheet of the company. And if that's not there, guess what? I can shoot it up high all I want, but eventually it's going to come back to what it's really worth. And so traders, constantly get the blame for causing trends, causing sell-offs, and the wolf pack mentality and everything else that you've heard. But really, all they can do is follow a trend. They can't form a trend. And the euro is not going down against the yen and the dollar because traders are trading it down. They're doing it because there's real problems in Greece, there's real problems in Portugal, Spain. The sentiment's gotten bad. The money flows are heading away from Europe out of many of their markets and investments and into other aspects of other global economies. And so, when that's happening, they're just simply hopping on, seeing that opportunity, and hopping on and taking part in it. They can't make the trend, but they can simply follow it. And that's what I'd encourage you to do as well. Look at these trends. Let the market tell you what it's doing. Don't let the news headline tell you what it's doing. Let the market tell you, and then respond accordingly. In this case, with the downtrend, looking for sell short signals. Hey, check out our Currency Cross Trader service. You can contact Sarah or Jesse or any of them at worldcurrencywatch.com. And I believe that you would enjoy that service. It gives you exact buy and sell recommendations with exact stop and limit levels, and even how many lots you should put on for a certain amount of account balance that you have as well. So check us out. Thanks so much for watching. Bye-bye.